Most people think investing means only three things: stocks, real estate, and maybe crypto. But the truth is, there are dozens of ways to invest money, and some of the most powerful ones are the ones most people completely ignore. In fact, one of the investments on this list has created more millionaires than any other asset in history. Another one can pay you income every single month, and one of them requires almost no money to start. Today, I'm going to show you 20 different types of investments, how they work, and why smart investors use multiple strategies at the same time. And make sure you stay until the end, because investment number 22 might be the most powerful investment of all. Let's start with the one everyone knows. 1. Stocks. Stocks represent ownership in a company. When you buy a stock, you're literally buying a small piece of that business. If the company grows and becomes more profitable, the value of your shares increases. For example, if someone invested $1,000 in companies like Amazon or Apple years ago, that investment could be worth tens or even hundreds of thousands today. But stocks also carry risk. Companies can perform poorly, markets can crash, and prices can fluctuate daily. That's why experienced investors rarely rely on just a few individual stocks, which leads us to the next investment. 2. Index funds. Index funds are considered one of the best long-term investments ever created. Instead of buying one company, an index fund lets you buy hundreds of companies at the same time. For example, the S&P 500 Index Fund tracks 500 of the largest companies in the United States. That means if those companies grow, your investment grows with them. Historically, the S&P 500 has returned around 10% per year on average. This is why legendary investors like Warren Buffett often recommend index funds for beginners. But what if you want investments that pay you regularly? 3. Dividend stocks. Dividend stocks are companies that share their profits with investors. Instead of only making money when the stock price increases, you receive cash payments regularly, often every 3 months. Companies like Coca-Cola and Johnson & Johnson have paid dividends for decades. Some investors build entire portfolios focused only on dividend stocks to generate passive income streams. But there's another investment that also produces income. 4. Real estate. Real estate has been one of the most reliable wealth builders for centuries. When you buy property, you can profit in two main ways. First, the property may increase in value over time. Second, you can rent it and collect monthly income. This combination of appreciation and cash flow is why many millionaires invest heavily in real estate. However, buying property requires significant capital. So what if you want exposure to real estate without buying buildings? 5. REITs. REIT stands for Real Estate Investment Trust. These are companies that own and operate large real estate portfolios, such as shopping malls, apartment complexes, office buildings, hospitals. When you invest in REITs, you essentially invest in real estate portfolios managed by professionals. By law, many REITs must distribute most of their profits to investors, which often results in attractive dividends. But maybe you're looking for something even safer. 6. Bonds. Bonds are essentially loans you give to governments or corporations. When you buy a bond, you're lending money. In return, the issuer pays you interest over time and eventually returns the original amount you invested. Government bonds are generally considered lower risk, while corporate bonds may offer higher returns but slightly more risk. Many investors use bonds to stabilize their portfolio during stock market volatility. But not everyone wants stability. Some investors chase high growth. 7. Cryptocurrencies. Cryptocurrencies are digital assets built on blockchain technology. The most famous example is Bitcoin. Early investors in Bitcoin saw returns that were almost unimaginable, turning small investments into massive fortunes. However, cryptocurrencies are extremely volatile. Prices can rise dramatically, but also crash quickly. Because of this, most financial experts recommend limiting crypto exposure to a small percentage of your portfolio. But some investors prefer assets that have existed for thousands of years. 8. Gold. Gold has been used as a store of value for over 5,000 years. During economic crises or high inflation, investors often move their money into gold because it tends to retain value when currencies weaken. Gold doesn't produce income like stocks or real estate, but it can serve as a financial safety net. But gold isn't the only precious metal investors buy. 9. Silver. Silver is both a precious metal and an industrial resource. It's widely used in electronic solar panels, medical equipment. This dual demand makes silver interesting because its price can rise both due to investment demand and industrial growth. But now let's move into something with much higher risk and reward. 10. Startups. Investing in startups means funding early-stage companies. If the company succeeds, the returns can be enormous. Early investors in companies like Uber or Airbnb made incredible profits, but most startups fail. That means this investment carries significant risk and requires careful evaluation. Still, wealthy investors often take this risk. 11. Private equity. Private equity involves investing in companies that are not publicly traded on stock exchanges. These investments often require large amounts of capital and long investment horizons. Private equity firms buy companies, improve them, and later sell them for profit. Many of the world's wealthiest investors participate in this sector, but not all investments are businesses. 12. Fine art has become a serious investment asset. Paintings from famous artists have sold for tens or even hundreds of millions of dollars. Collectors buy art, hoping that its rarity and cultural value will increase its price over time. However, art markets require expertise and patience. 13. Wine. Rare wine is another collectible investment. High-quality wines from famous regions can appreciate significantly as they age and become rarer. Specialized markets now allow investors to buy and store investment-grade wine. 14. Farmland. Farmland is gaining popularity among long-term investors. Why? Because global food demand continues to rise while arable land is limited. Farmland can generate income through agricultural production while also appreciating in value over time. 15. Domain names. Domain investing involves buying valuable internet addresses. Some domain names have sold for millions of dollars because businesses want memorable website names. Investors buy domains hoping that future companies will want them. 16. Digital products. Digital products include online courses, ebooks, mobile apps, software tools. Once created, these products can generate income repeatedly without significant additional costs. This makes them one of the most scalable business investments in the digital economy. But the next investment might surprise you. 17. Skills. Investing in your skills may produce the highest returns of any investment. Learning high-income skills like programming, digital marketing, AI tools, sales can dramatically increase your earning potential. Unlike other assets, skills cannot be lost in market crashes. 18. ETFs, exchange-traded funds, combine the diversification of mutual funds with the flexibility of stocks. They allow investors to easily invest in entire sectors like technology, healthcare, or energy. ETFs are widely used for long-term diversified portfolios. 19. Rental businesses. Rental businesses involve owning assets that people temporarily use. Examples include Airbnb properties, vehicle rentals, equipment rentals. These businesses generate regular cash flow and can scale over time. 20. Your own business. The largest fortunes in the world usually come from building businesses. Entrepreneurs create value, generate revenue, and build assets that can eventually be sold for millions. Many investors first build businesses and then use the profits to invest in other assets. 21. Peer-to-peer lending. Peer-to-peer lending, also known as P2P lending, is when you lend money directly to individuals or small businesses through online platforms. Instead of a bank collecting the interest, you collect it. Borrowers pay monthly interest, and investors receive those payments as returns. Some platforms offer annual returns between 5% and 12%, depending on the level of risk. However, there is always the possibility that borrowers default on their loans. But lending money isn't the only way to profit from finance. 22. High-yield savings accounts. This might sound simple, but it's still an investment strategy. High-yield savings accounts pay much higher interest than traditional savings accounts. While a normal bank account may pay almost nothing, high-yield accounts can offer several times more interest. They are not designed for massive wealth growth, but they are excellent for protecting emergency funds while earning interest. But some investors want something that combines saving and investing. 23. Certificates of deposit, CDs. Certificates of deposit are fixed-term savings investments offered by banks. You deposit money for a specific time period, for example, 6 months, 1 year, 5 years. In return, the bank pays you a guaranteed interest rate. The trade-off is that you usually cannot withdraw the money early without penalties. Because of this, CDs are often used by conservative investors looking for predictable returns. But now, let's move into something much more modern. And 24. NFTs or non-fungible tokens are digital assets that represent ownership of unique items on a blockchain. They can represent art, music, collectibles, digital items. Some NFTs have sold for millions of dollars, although the market is extremely speculative. This makes NFTs a high-risk, high-volatility investment. But digital ownership is evolving in other ways too. 25. Royalties. Royalty investing means earning money from intellectual property. For example, music royalties, book royalties, film royalties. Every time the content is used or sold, the owner receives a percentage of the revenue. Some investors buy rights to royalties as long-term income streams, but intellectual property isn't the only passive income strategy. 26. Franchises. A franchise allows you to operate a business using an established brand and business model. Companies like McDonald's built massive global networks through franchising. Instead of starting a business from scratch, franchise owners follow a proven system. The advantage is brand recognition and support. The disadvantage is that franchise fees and startup costs can be high. But some investors prefer assets that move. 27. Classic cars. Classic cars have become a niche investment market. Rare and historically significant vehicles can increase dramatically in value over time. Collectors often buy cars hoping that rarity and nostalgia will push prices higher in the future. However, classic car investing also includes costs like storage, maintenance, and insurance. But let's move into something connected to the energy sector. In 28, energy investments. Energy investments involve companies or projects related to oil, natural gas, solar energy, wind power. The global demand for energy continues to grow. Because of this, many investors see energy as a long-term investment opportunity, especially with the growth of renewable energy technologies. But energy isn't the only sector investors target. 29. Commodities. Commodities are raw materials used in the global economy. Examples include oil, wheat, corn, copper. Investors trade commodities through specialized markets or funds. Commodity prices often move based on supply shortages, economic growth, and global demand. Some investors use commodities to diversify their portfolios and hedge against inflation. And finally, the last investment might be the one that determines how successful you become with all the others. 30. Financial education. Financial education is one of the most underrated investments in the world. Understanding money markets, taxes, investing strategies can completely change your financial future. People who learn how money works make better decisions, avoid costly mistakes, and identify opportunities faster. And that knowledge compounds over time, just like investments. The biggest mistake people make with money is relying on only one investment strategy. Wealthy investors diversify across multiple assets: stocks, real estate, businesses, skills, digital assets, because true financial freedom comes from multiple streams of income. Now I'm curious, which of these 30 investments surprised you the most? Let me know in the comments. And if you want to learn how to build multiple income streams and financial freedom, make sure you subscribe to the channel, because the next video might completely change the way you think about money.